Hey, future millionaires? So tax refunds are coming up and you might be wondering what's the best use for that money? And yes, it's true, tax credits are like Christmas in July or earlier sometimes, but without the worries of having to buy gifts, wrap them up, and basically see your money wash away. Still, after a full year of hard work, you're probably considering some options and you might even already have some items on your Amazon wish list. On the other hand, if you're into investing and growing your money faster than the average Joe, you can be wondering where to actually put that money and how to get the max out of those tax credits. So today I bring you a game plan that it's very easy to execute so that you can maximize the return on your money. And I want to share it with you because I want you to live a better life. Let's dive into it. Let's begin by clarifying how much an actual tax refund is. The IRS estimates that, on average, a person receives somewhere around $3,000 under tax refund. That, of course, does not include people with kids or filing jointly or separately, or if you have many dependents, that's just a rough estimate on individual tax refund. So that number might change in the long run and depending on your personal circumstances. So in order to determine what the best use for that money is, we first should hear what the experts have to say, and it turns out that many of them have different opinions, but they all agree on one thing, and that is diversification. Now, that's a big word, right? And how are you actually going to diversify? It's around this strategy that I'm about to share with you today, and that's known as the Rule of 25. The Rule of 25 refers to your money basically being spread into 4 equally distributed parts of 25% each. And if you know a little bit about math, that will total 100% with each of these parts going into different purposes so that you can once again make the most out of your tax credits. So let's start with the first one, and that's going to be a rainy day or emergency fund. The first 25% should go towards some sort of setup for emergencies. Consider this as a last resource in case you actually need it, and this might include a loss of job or any medical emergency as well as expected expenses, repairs such as a flat tire or any repairs in your home. This is not money that you save for expenses such as gifts or other large purchases. Although you might also use this money in pro of starting a business, so that you can get some funding while you get started. Once you've defined your emergency fund or rainy day, let's go into the second portion of your tax refund investment, and that's actually going to be the investment portion of it. And this can be either a stock, meaning a company that you know or believe in, feel comfortable investing in, or an ETF that will provide you with a more consistent return on investment with the lowest risk. And many of the S&P 500 ETFs can provide you with a decent year-over-year return. So it's up to you and which one you decide to invest in. Now, if you're into crypto, you can also buy some of your favorite coins. Another option is to invest in real estate, and you don't need to go and buy a house. I don't mean that. What I mean is you can use shared funds such as Fundraiser, which many times has a very stable return and comparable to those of an ETF and the stock market. As with any type of investment, I recommend that you do your own diligence and your own research so that you know what you're getting into. But you definitely want to take this second portion of your tax refund and put it into something that's going to grow your money. So far, the first portion is mostly to build an emergency fund. That's a backup, that's not money you're going to be using. And the second portion is for you to put the money into working for you. You don't want to just save the money, you want it to grow. And that's why you go a little bit more aggressive with strategies such as the stock market, ETF, crypto, or funds for real estate. Now it's time to discuss the third allotted portion of this tax refund, and that should go toward paying down or lowering your debt. This includes, and it's actually thought, for high-interest credit card or any type of loans that might be eating your financial health. This is not to pay off your mortgage early or to pay any type of low fixed income interest on large assets, although you might choose to do so, and that will benefit you in the long run. Let's pretend that you're all squared away with that, and congratulations, by the way. Then you might want to look into saving this money, and you can do so in many regular savings accounts that you will find in, say, Bank of America, Chase, Wells Fargo, and other banks. Or you can look into the high-yield savings account, which sometimes they offer, and other platforms as well, such as your online broker. And that brings you more interest over time at around 3%, sometimes even more. So you want to definitely take this portion of your money to either pay down debt, and if you don't have any debt or any high-interest debt, then you want to use this money for savings. And that is different from the emergency fund in the sense that this is money that you might use in the shorter term and you might just have to grow depending on your interest. So I'm giving you a little bit of wiggle room here. But the goal of this money is to use it toward your benefit and, if sense, to either lower bills or save it for the future. And with that being said, you should be in a good position to use the remaining 25% of your refund to spend it. And yes, this is for yourself or for those you love. If you have family or close ones, you want to treat them to something special. After all, this is your money and you deserve to enjoy it. You've been working very hard for a year and now it's the time for you to treat yourself or those that you love. So, yes, go ahead, use this portion of the money to buy that new gadget that you want or that expensive toy. Or if you didn't have a chance to get something for your family at Christmas time, now is the chance to get the new PS5 or iPhone or MacBook, whatever it is that you're after. This is what you deserve for working so hard so that you are keeping a balance. Again. This is after you have invested your money, you've created your emergency fund and you're knocked out debt or build more savings. Do not spend the whole entire refund on things you want. Otherwise you will be in the same or worse financial position a year from now. Remember, there's inflation and many other aspects affecting the economy. Unfortunately, most people out there are not following this advice, even if they know it already, because they prioritize short-term gratification over long-term success. So don't be like them and instead leverage on this information, take action, and make it easier for you in the long run. So after all, if you notice, this strategy helps you concentrate the majority of your money into investing and saving while still making room for a treat so that you can give yourself a pat in the back and your family also and something to enjoy. This will keep you motivated to continue to use this strategy and any time that additional money comes your way. Thus minimizing the temptation of spending it all but only a small portion, while still remaining true to your financial goals. And since you've stayed until the end, here's a bonus credit picture of a cute crab. If you find this content valuable, please like and subscribe and share with your friends. See you next time.